Investors, hello. This is Stock AI Insights Crypto Pulse, and I'm your chief AI analyst. Just a reminder, this is for educational reference only and not investment advice. Crypto assets are highly volatile, so please enter at your own risk. Today, we're parsing MicroStrategy's incredibly bold Bitcoin bet right in the middle of a full-blown market meltdown. We've only got a few minutes to decode this high-stakes move, so let's jump right in. The data hook? Well, as the market was absolutely reeling from Bitcoin's sudden crash below that key $100,000 level, one major player was doing the exact opposite of everyone else.
All right, so here's how we're going to break it all down today. First up, we'll get an overview of the event itself, what that market storm actually looked like. Then we'll dive into a cause analysis, what was behind the panic and what was behind the conviction. And finally, we'll look at the impact and the outlook for MicroStrategy going forward.
So let's set the scene. Picture this. A scenario that people had kicked around as a hypothetical suddenly becomes very, very real. Bitcoin's price just tumbles, shattering that crucial $100,000 psychological barrier. And look, this wasn't just a small dip. This was a liquidation cascade that kicked off a digital storm of panic selling across the entire market. But right in the eye of that hurricane, one company stood completely unshaken. And the fear wasn't just coming from retail investors. Not at all. The institutional side was de-risking in a massive way. We saw a collective outflow of $867 million. That's from major spot Bitcoin ETFs in a single day. This was a significant flight to safety, and it really shows that even the big money was spooked by just how fast and how hard the price was dropping. And you know how it goes. In all that chaos, a single rumor starts to spread like wildfire, just fanning the flames. An alert suggested that MicroStrategy, which is Bitcoin's biggest corporate holder, was selling off its stash. But the company's executive chairman, Michael Saylor, he moved instantly to put that fire out, stating with no room for doubt, there is no truth to this rumor. A direct, simple, and absolute denial.
But he didn't just stop with a denial. He followed it up with this really powerful symbolic message. Just one word, HODL, the ultimate crypto creed for holding on for dear life. And the image that went with it, it was a masterclass in crisis communication. He wasn't just squashing a rumor, he was reframing the entire narrative. This wasn't a price collapse anymore. It was a test of conviction for the true believers. Look at this chart. This, right here, this is the drop that caused all that chaos. Seeing the price fall off a cliff like that sent shockwaves through the market. But here's the kicker. While this chart drove almost everyone else to sell, it drove Saylor to buy. He went on CNBC right in the middle of this downturn and confirmed MicroStrategy was actively accumulating more Bitcoin. Talk about a countercyclical move. Okay, so this brings us to the real heart of the conflict here. Why all the panic? Well, it was really a clash between two fundamentally different worldviews. You have the market reacting to cold, hard data versus Saylor, who's operating on this long-term, almost philosophical conviction. Let's really dig into what was driving each side. The market's fear was being fueled by data that looked just like this. During the downturn, Bitcoin's recent gains were almost totally wiped out. It was behaving just like another high-risk tech stock. Now, a true safe haven asset, the whole digital gold idea, is supposed to hold its value when other assets fall. But here, we see actual gold up over 50%, while even the S&P 500 showed resilience. This performance directly challenged Bitcoin's core narrative. And this sentiment was echoed by professional traders. Louis Sykes from All-Star Charts put it perfectly, really capturing the mood of cautious uncertainty. His advice to go play golf pretty much represents the professional consensus. When the data is this confusing and the trend is this uncertain, the smart move is to just step away and wait for a clearer signal. But Michael Saylor, he's seeing the world through a completely different lens. For him, this volatility isn't a bug, it's a feature. He sees it as the price of admission you have to pay for a revolutionary new asset. His perspective is best understood through this metaphor of a powerful ocean tide. Sure, the tide may go out, creating fear and exposing the seabed, but in his mind, its return is not only powerful, but it's inevitable. And his actions absolutely back up this philosophy. This quote from his CNBC interview is just crucial. He wasn't just holding on. He was actively buying into the weakness, telling everyone they were buying quite a lot. So for Saylor, this wasn't a crisis. It was a golden opportunity to increase their holdings at a discount, strengthening their position for the long term. Look at this chart. This really just brilliantly illustrates the divergence that has the market so worried.
To most analysts, this data is a clear, blinking red light, a failure of the digital gold thesis. Michael Saylor, on the other hand, is betting his entire company that this is all just short-term noise. So, let's shift gears and talk about the real-world consequences here. Because this clash of philosophies isn't just theoretical. It has had a massive, tangible impact on MicroStrategy's stock, MSTR. And this is where that deep conviction meets the cold, unforgiving reality of the public markets. So the crucial number here is 46%. That's how much MicroStrategy's stock plummeted, hitting a 13-month low. You see, by transforming its balance sheet into a Bitcoin acquisition vehicle, MSTR has become, for all intents and purposes, a leveraged bet on Bitcoin. So when Bitcoin catches a cold, MSTR gets pneumonia. The stock price is now directly tethered to the crypto market's fear gauge. And this forces a really critical question for any investor looking at this space. Can you, or even should you, evaluate MicroStrategy's business independently of Bitcoin's daily, sometimes hourly, price movements? Well, the market's answer for now seems to be a resounding no. But Saylor's counterargument is all about their financial structure. He addressed these fears head-on, explaining that because their loans are backed by Bitcoin worth far more than the debt itself, in other words, they're over-collateralized, they can withstand some really extreme scenarios. This quote right here is his ultimate defense. Even in a catastrophic 80% price collapse, the company's collateral would hold and they would be fine. Look at this chart. This table just perfectly captures the paradox at the heart of this entire story. On one side, you have this ever-growing mountain of Bitcoin, over 641,000 of them. But on the other, you have a stock price sitting at a 13-month low. The gap between the value of the assets they hold and the market's valuation of the company is just getting wider and wider, representing this deep chasm between Saylor's conviction and the market's skepticism. So what's the bottom line here? This entire event really just boils down to a high-stakes clash. On one side, you've got this long-term, almost generational vision for Bitcoin as a new capital asset. And on the other, you have the market's brutal, unforgiving, short-term risk assessment. It's almost like a game of chess being played against a game of checkers, but on the exact same board. Verdict: this all brings us to the final, crucial question. What gives first? Does the relentless pressure from the stock market force a change in MicroStrategy's conviction, or does the fundamental value of all those assets they're holding eventually force the market to change its mind? Drop a 1 in the comments to let us know you're with us. See you for the next on-chain move.